Sergio, strong numbers. Anything stand out?
Well, first of all, I think that what's standing out is that we are getting almost at the end of the tunnel. So 3 years ago, we reported our first consolidated numbers post the acquisition of Credit Suisse, and now seeing the results of all the hard work we put down, and the hard decisions we had to take in the journey are starting to pay off. And so stand out is good momentum across all our businesses. You can see that in 45% increase of our underlying PBT, and so basically the synergies and the top line developments are working well, and net assets are up 7.3 trillions of assets we manage, good inflows, and the integration is almost done, still not fully done, but I'm very pleased with our momentum.
Near the end of the tunnel. Let's talk about the buyback. Everybody's been very eager to hear what you had to say on the buyback. You've announced 3 billion over 6 months, but 1 billion over 3 months. Why that structure? Why not go 50-50? Is it because you think maybe in 3 months' time you might have more clarity on the Swiss capital rules? Can I read something into that structure?
Not really, because the issue is that what we have is this programs that we have to file with the stock exchange in terms of buyback programs that we can execute in theory over 2 years. And our capital return policy and ambition has been set at the beginning of 2026, when we say that our aim was basically to start with 3 billion and then assess the situation at the end of the first half. So what we do now is we have a new plan, a new program and we intend to execute it over the next 12 months. But the pace and size will be determined by our capital position, so staying at 14%, and also the ongoing development in the business, which we are very positive of, but also the ongoing discussion on too big to fail, like we did in the last 2 years. The language hasn't really changed.
The language hasn't really changed, so I shouldn't expect in 3 months' time some clarity on too big to fail.
The billion has to be seen as a minimum commitment that we will do, rather than putting a clear indication on anything more than that.
Equities, very strong. Plus 53%, I think, is the number. That's a nice number. The surprising thing is that you've done it without any extra capital. That's the real standout here. Let me ask you the same question I asked Venkat at Barclays yesterday. If you'd have given that division a bit more extra capital, if you'd have funded it differently, if you'd have provided more for it, could that number have been significantly higher? Are you throttling back equities at the moment? How high could that number be?
Not really. Actually, what we did, the point you raised is a good point, but what we did within the investment bank, we also shifted some capital from the fixed income businesses to the equity business to help them. But our focus is really, which I also believe that the numbers are very strong, because they are mainly driven by intermediation activities. And rather than deploying capital in prime brokerage. But going back to your story, this is more about our strategic capital allocation at group level. We made that decision in 2012 that our investment bank fits a strategic ambitions that we have to support our wealth management clients, our institutional clients, our corporate clients, but with a defined capital allocation. So we had ups and downs in times in which was very rewarding to have that, and times in which you may have some opportunity cost. But when I look at the full results, a 23% return on allocated capital for the investment bank is pretty strong result. So we are very happy with it.
Okay, but the opportunity cost. Let's just talk about the opportunity.
Yeah, but the opportunity cost.
JPM did 86%. Yeah, could you have done that kind of number?
Yeah, but is not something. If and when doesn't matter, because I think our philosophy, our capital allocation, and our stock is rewarded by this business mix, and not by taking opportunistic and tactical view on momentum in any of our businesses.
Do you think if you were a US bank, you'd do something close to, what was it, 86% for JPM, Goldman Sachs did 71%. If you were a US bank, do you think you'd get those kinds?
It's too hypothetical to answer that question.
Well,
we are not a US bank, we are a Swiss bank, and we are very happy with that kind of
you can see where I'm going with that, if you re-domiciled. Is there a cost to being a Swiss bank?
I think there are also a lot of good opportunities, but of course things have to be fully balanced. But I'm very happy with our results and what we achieved as a business mix. Right? So if you look at wealth management, you look at the Swiss business, asset management, and the investment bank all together put up a very strong set of results.
Just going back to what you did in equities and why you did it, as you said, not extra capital, the reason was because markets, like, there's volatility. The volatility is extraordinary at the moment. Do you expect that to continue? Is that something that we should expect? Do the markets feel frothy to you right now? What do you see?
If I look at the macro picture, the geopolitical picture, the ongoing debates, also the big dispersion we see in equity markets, and the pressures and on energy prices creates potential headwinds on inflation, and that may turn out to be something that investors will not really like, and creating potential volatility. So I do expect spikes of volatility to continue for the rest of the year.
That takes me on to a question about flows and where the net new money came from. How much of it came out of the Middle East?
Not really. I mean, yes, Europe was a strong contributor. Switzerland was a strong contributor to the business, Asia, and also the positive developments in the US, where we had a small uptick on net new assets, despite the fact that we had a seasonality with tax payments outflows. No, but not particularly from the Middle East. And
okay, full year. Let's look ahead. I read the statement, and I listened to your CFO this morning. The briefing sounded quite positive on where you are with the full year. How close are you to being really confident that you can achieve your full year targets? How close are you to saying, actually, I think we can exceed these?
We are confident we can achieve our targets.
Exceed?
Exceeding it is premature, because we still have 6 months to go, and the situation is very volatile. We are also facing a seasonality factor, the conclusion of our integration process, but we are, well advanced, and I think the momentum is pretty good. But we take it quarter by quarter.
In terms of kind of what you're doing with the bank right now, AI is, and I see it in the statement this morning, you're working with Oxford, you're doing all kinds of things that are trying to enhance your AI capabilities. Are you at the point yet where you can understand what the ROI on that is?
I think that we are at a point in which we can start to plan for the next 2-3 years. So basically, AI is not going to be a journey that changes your quarter-on-quarter results. Okay. So you need to put investments, you need to change processes, you need to train people. And it takes time, but I do believe that the economy of scales that we can create in the next 2-3 years are significant for cost, but also for potentially improving our top line and allowing us to also expand into new segments of businesses or new markets. So AI opens a lot of opportunities. This is the reason why we are now basically already deploying 500 plus agents and applications, and we are working on 9 big mainstreams that will allow the bank to become a more agile and profitable in that sense, and efficient also. But also.
But can you nail down? Everybody's trying to work out what the cost of a token is. Everybody's trying to work out what the cost of. How do I make sure that I'm not overspending?
Because the issue is that you invest, but you also reduce cost, and this is something that will be reflected when we look at our growth plan for the next 2-3 years, that we will present at the beginning of 2027, and going forward, you will be able to see and measure what are the benefits. But as I say, AI is not changing firms overnight.
Okay. Let me just come back just to wrap up. There's a couple of kind of follow-up questions on the capital situation and what you do next. The SNB and the Swiss government say you have enough capital right now. I see the document you put out this morning laying out the arguments that you have around too big to fail. Why is there such a big gap between your perception of whether or not you have enough capital and their perception of why you, and their belief that you have enough capital?
Well, the big difference is that we don't work on perception. We work with facts and figures. And so the issue is that it's undisputed even by the authorities that the proposed regulations will cost 22 billion of capital. The fact that we have a strong capital position right now with some buffers doesn't take away that the impact of the new regulation is 22 billion. So it's not correct to say that the impact is 9 billion. The impact is 22 billion. And so what we put out as a series of topics that tries to explain the difference within interpretations with facts. And what we want to do is to contribute to a fact-based decision process by the stakeholders that will need to take that decision.
And do you think we are now getting closer to a point at which we can finalize this?
Look, this is now is in the end of the parliament. It's a political process. We have no influence on the speed of how they're going to determine that. I'm hopeful that between now and the end of the year, we're going to get some better understanding of the direction of travel.
I asked that question because 4 years ago, you were one of the best returners of capital to shareholders. You were right at the top. Obviously, what has happened over the last 3 years, Credit Suisse, what has happened with the government, has reduced that. When do we get back, is it next year, to the point at which UBS is right back up at the top? How close are we to that point? How much longer do you think investors have to wait?
Well, I think investors have been very patient, and we are very happy that they're going to now to start to be rewarded. The journey, of course, we had a 17% return on CET1 in 2022 UBS standalone. After 3 years of work of integrating Credit Suisse, we're now going to land at around 17%. Actually, if you look at our first half results, we are at around 17% return on CET1. So this shows how much work we had to put down and how much investments our shareholders had to put down in order to absorb Credit Suisse. Now we start to look forward. In addition to returning capital through dividend and share buyback, we have now a better platform that will allow us to grow further and to be competitive and successful.